Hi everyone, welcome to this week's market recap. Last week, market shifted from rate cut hopeful mode to cautious mode. Technology and AI-related shares were especially weak because investors were concerned may be overvalued.
Michael Burry, rather say the legendary Michael Burry. If you don't know who that is, I don't even know how you're related to trading. Recently has shorted about $1 billion in AI tech-related companies, which also backs the idea that there is a looming fear that AI may collapse soon. And if you care to ask what possibly can cause this hypothetical disaster that AI tech companies collapse, while you're asking me, you can ask the fundamental guy, type it down in the comment sections and Amir will get back to you on it. About technical stuff, I'm going to show you how that looks on charts. And let's go. So here's NASDAQ as represented in front of us. Now, as I've highlighted in the previous week, we had some very good opportunity to go long. If you guys took the trade, you would have been in some profit. If not, then don't blame me why you're not making profit. Now, secondly, we had multiple opportunities to short here, multiple reasons why market should reflect from this resistance. Of course, your target should be support, and this is exactly how market reacted. Now, from here, we want to know what's going to happen. Most likely, we'll find some sort of consolidation from here. Why? Or actually, we could find a little bit of an up movement before a consolidation. So why is this to happen? Technically, we have good reasons why NASDAQ should go up, because it is at a very good support level. And it did make that movement. However, it pushed it back into the same support. And we all know what it means, or maybe not all of us, when the market tries to retest the same level multiple times. Fundamentally though, the legend thinks, I mean Michael Burry, he thinks there's about $176 billion, if I recall the number right, as in hidden costs being hidden from AI tech companies, right? So this should be represented as a bubble in the market, and once it blasts, AI collapses. Technically, if you go to a higher time frame, you can do it yourself or you can be lazy. I'll give you the informations. If market crashes, we are looking for, not short term, this could take 6 months minimum. Yeah, or actually if market got crazy, who knows? We can never really predict time. So if market crashes, we can look about levels of 22,000. Now I can give you some investment advice, and whatever I'm saying now is not a part of it. But if you want that advice, come and meet me in person. I'm not gonna give it to you in the video. So 22,000 is an optimal target in market crashes. Now fundamentally, we don't have these reasons yet. However, a lot of investors are reacting in shorting NASDAQ based on following Michael Burry's decisions and opinions. One thing to keep in mind is that, or 2 points to keep in mind, that Michael Burry did not short NASDAQ itself. He actually took put options on Nvidia and Palantir. So that doesn't mean it's all NASDAQ or the economy should collapse. However, investors are taking that sense of shorting it for a longer term because someone who's more experienced and possibly more smarter or more insightful than they are is doing that. So they're following that and creating this bearish sentiment upon markets in an early approach. We don't really have the fundamentals reason demonstrated on the screen currently for markets to crash, but that's the whole bigger picture of what is going on. So that's why we have this conflict, I would say, or yeah, they call it volatility, but actually it's not volatile because market is technically performing very well. So that's about NASDAQ for a long term and for a short term. Let's go into gold. Looking at gold, also as predicted, very good movements, as I've highlighted in the past week. Market condition, target, movements, and exactly as we anticipated. Post this impulsive movement to the upside, we had another impulsive movement, another opportunity for you to go for a long trade. And here we did have actually on this time frame 3 confirmations, and on all time frames multiple confirmations why gold will fall past this movements from this resistance level, and it did. So where would your target be? We had 2 targets, 1, 2. Gold was perhaps previous week one of the easiest to predict. So that's about gold of what happened in the past week. Now what we're looking for is some sort of retracement from this crash. This was actually a big move on gold as in bearish sentiment. However, this is a strong support. So from here, we can expect market to retrace to this inner resistance as a minimum for the coming week. That's about gold. Let's go to Nifty 50. Looking at Nifty 50, we can clearly see also, as I've stated in the previous week, we will see some impulsive movement to the upside and an attempt to break above all-time high. So we did find that impulsive movement as anticipated. Now, one thing to highlight here is that market actually didn't even reach to all-time high, but it created a lower high. This indicates there is still some doubts in confirmations that markets may not break it or break all-time high as soon. So from here, we had a retracement to the inner support, and from here we found an impulsive movement to the upside. So most likely market will try again to break, or this time will actually try to break all-time highest, but more likely we'll find consolidation post that attempt to break above all-time highest. And yes, because of the looming fear, right, about all this AI and tech and the possible crash, even though not very short-term, in the global market, or let's say US markets, globally, we are not looking for something very impulsive to happen soon, because when there's some looming fear, especially in investments, it kind of affects, not kind of, it does affect global markets, especially when that fear is based on futuristics, optimism, speaking about AI. Right, so hence there is a very good possibility we'll see an attempt to break above the all-time resistance, but also a very considerable possibility that it will not break from the first attempt to come. That's about Nifty 50. Let's go into EURUSD. Once again, upon EURUSD, as I've highlighted in the previous week, we were looking for a bull trade because of how market reacted to the previous downtrend. Yeah, so market did exactly as we anticipated, went to the resistance. So from here, we can expect a continuation to this bullish trend on EURUSD on a certain period of time frame, not this week exactly. So from here, we can see market either falling to the inner resistance, filling, the inner support, filling the FVG, right, and then continues to the upside, making for us this uptrend, or if we see it retracing below this inner support of the FVG, this can reflect actually in a possible consolidation to come along for a good period of time. So if we see something like that, right, we could see a continuation to the movement downside or to the upside, or market might just keep consolidating in that area. So this is about EURUSD, not the best time to enter. I'll be frank with you. We had a lot of opportunities last week. So this week we do have a lot of opportunities, not necessarily in EURUSD on a bigger scale. If you go for daily trades, then of course there will be definitely opportunities for us to take and make some good trades with. That's about EURUSD. Let's go into Bitcoin. Looking at Bitcoin, perhaps this is the only asset, which is uncommon, that I didn't get it too right in the previous week. We did have bullish confirmations, and if you consider, I did get it somewhat right because it did move up from that area. However, it did break below the level of 100,000. So I still hold to what I think, not as being, not to be stubborn, but to be logical about the bigger picture and the longer time frame. So probably this push is to give us a good price, or not us actually, to give those who are interested in, you should know who, get a better entry upon Bitcoin for a longer time frame, for a longer hold. There is actually some looming expectations that Bitcoin might fall to $66,000. Now that's some fundamentals analysts, some people who are experienced with Bitcoin are expecting that. I personally don't think that is the case. However, on a short time frame or short period of time, yes, Bitcoin is bearish, especially because I said bearish because it broken below the strong psychological support, which is 100,000. So from here, we can expect a retracement to the inner resistance and a possible continuation to the downside. Now, one thing to understand here, technically, right, we had Bitcoin going below the trend line, and then we saw somewhat of a retracement. Do you guys want my experience directly, all of it in the video? Yes, you do. Will I give it to you? No, I won't. I'm just kidding. Right, look, I would, but it's just going to take a lot of time. Long story short, even though there is a bearish push to the downside, I still can see this as somewhat of a volatile move to the downside. And just take a zoom out, you'll find that all this trend is actually making somewhat of a bullish early phase. So what should you do with Bitcoin? I would recommend if you're looking for day trades, then definitely you can go with it. If you're looking for a week trade, then yes, you can wait for a retracement, get a confirmation and sell. Confirmation and sell again. If you want to hold it for a long time, it's better to give it some time to breathe. Yeah, and possibly we'll find something more directing by next week. So that's it about the technical outlook. Samer Islam was here with you, and I'll update you upon next week.
Thank you, Samer, for sharing your insightful information regarding the technical. Here is Amir Amidian, Senior Financial Market Analyst and Master of Finance student in London. Let's have a look to the financial markets. And as you can see here, we are getting closer and closer to the winter as the weather is almost cloudy in London. Let's start the market update for this week with the Fed officials' speeches last week. Last week, Fed officials stressed that inflation is still above the Fed target and policy remains only slightly restrictive. They warned that bringing inflation down without hurting employment is a tough task, but most signaled no urgent need for further rate hikes in the upcoming months. At the same time, they highlighted rising risks from new financial trends, especially stable coins, which they said could become a major force in demand for the US assets and growing concerns for policymakers. In the United Kingdom, the GDP has shown a slight increase, although it's being dragged down by the manufacturing sector. UK GDP rose by 0.1% in the 3 months to September 2025, with services only 0.2% up and construction 0.1%, keeping the growth positive. But a 0.5% slump in production led by weak manufacturing and mining kept momentum. Year on year, the economy is 1.3% larger, though early estimates may still be revised. From the corporate earnings, last week Disney and Cisco released their earnings for 2025 third quarter. Let's start with Disney. Third quarter revenue flat at $22.5 billion, but EPS jumped to $0.73 per share. Parks and streaming lifted profits despite weak TV shows. The Cisco also released their corporate earnings. As I mentioned earlier, the third quarter revenue was $14.7 billion and the EPS was 99 cents. A strong AI demand drives growth and rises the 2026 outlook. From the geopolitics, the US government shutdown finally ended, sparking a relief rally across the global markets. Investors cheered the return of government operations, though delayed economic data keeps uncertainty alive. From the other side, US-China trade and rare earth tensions flared up again, putting pressures on tech and commodity stocks. Markets braced for potential supply chain shocks as both sides hardened their negotiation stances. For the upcoming week, the main concentration will be on the corporate earnings, as 3 major companies who are truly active in the retail sector are going to release their earnings, such as Home Depot, Target, and Walmart. But keep it in mind, Nvidia, the biggest giant in tech and AI, is going to release its corporate earnings next week on Wednesday. Also, from the economic indicators, next week, at the beginning of the week, initially we are going to receive CPI numbers for the Canadian dollar on 17th of November on Monday. And by the way, at the middle of the week, we are going to receive some important economic indicators such as wage price index for the Australian dollar, CPI annually for the Great British Pound, and FOMC meeting minutes, which can clear all the doubts about the FOMC meetings and give us more detailed information regarding the FOMC meeting. And on 20th of November, on Thursday, we are going to receive the NFP numbers eventually after a long period of time because of the US government shutdown for the United States. And eventually on Friday, we are going to receive some major economic indicators such as retail sales number, monthly basis in the United Kingdom, PMI numbers for different regions in the Europe, UK and the US for the services and manufacturing, let's say production sectors. Stay tuned with Zylostar. See you next week. Have fun.
Thank you for watching us and stay tuned for next week.